Watch Budget 2018 with Bloomberg Quint. Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. You're watching Indian Open. I'm Nirav Shah. Morning, Nira.
Good morning, Niraj, and a very good morning to all of our viewers. Budget week begins. That's our top story here today. President Ramnath Kovind will begin the budget session this morning with an address to the joint session of Parliament, followed by the tabling of the economic survey. A US-based private equity firm drags Malvinder and Shivinder Singh to court, accuses the two brothers of siphoning off money from Religare Finvest to other privately held companies. Maruti's revised terms of royalty payment to Suzuki is expected to work in favor of the country's largest car maker. And HDFC Limited and Tech Mahindra will be two nifty companies coming out with earnings today.
And we'll watch out for all of those and more. But first, the trade setup. Remember, just a rewind as to what happened last week and how we're starting off this brand new, but albeit a short series, the Feb 1. So record highs for the indices, substantially high cash market volumes is something that we saw the whole of last week. A clutch of days wherein the NSE cash market volumes went above the 40,000 crore mark as well. Delivery percentages certainly healthy in certain cases. So it was a month that was, it was a series that was marked by substantially high F&O volumes, but more importantly, cash volumes as well. Month to date, the Jain FI flows are the strongest in the last 3 years. Jan 2015 was a figure northwards of 30,000 crores. Currently, it's about 11,000 crores. So FIs have been on the upside. On the contrast, DIIs, the first sell number by the DIIs since March 2017, if I'm not wrong. So there's a bit of a change in stance ahead of the budget in this current series. Let's see what happens during the course of the next few months. Just for this series, remember, the Nifty rolls were in line with average, but the Nifty bank rollovers were higher at about 71%. And that's the key thing. I think people have been bullish on Nifty bank. We have spoken about how Nifty bank needed to participate. It's in a way led the momentum as well. Let's see if that continues. But the positions by foreign institutional investors, as I said, are on the long side. There are some short put positions lasting as well as we enter the new series. So it'll be very, very interesting to see what happens if indeed there is a bit of a pull down and the unraveling happens, if at all. Or do these positions lead themselves to some more gains in the early part of the Feb series as well? Remember, a short series, I think the expiry is on 22nd or 23rd February. So it's a very, very short 3.5 week series. And a series marked by a bunch of events. As we said, budget, earnings continue, the RBI policy. It's a clutch of events as well that mark this short Feb series as well. So it should be interesting. What could happen today? I think US markets have shown their hand in Friday, big rally, and it's showing in the way the Asian markets and the SGX Nifty are trading. So we'll have a start in the green. The question mark only is, can we continue from there? This is what the US markets did, about 1% higher. Asia is doing okay. SGX Nifty 57 odd points uptick. So we'll have a start which is very, very robust in the session today. What to watch out for? I think from amongst the large caps, since it was a long weekend, a few people would have forgotten the numbers that came out, but Maruti came out immediately post market hours. Fairly decent numbers across the board. You look at a brokerage name, Jefferies, Credit Suisse, Nomura, clutch of Indian names, all of them have raised their target prices, even if they may not have upgraded the stock afresh. So watch out for Maruti in the session today from amongst the large caps, as also I dare say Avenue Supermarts, very strong numbers, revenues up 23%, net profit up 66% YOY basis, and this is not due to a low base, mind you, and margins improving as well, 10.3% versus 8.5%. So they've had an exceptionally strong quarter. It is an exceptionally expensive stock, but should be interesting to see what happens to Avenue Supermart. Speaking of results, by the way, a clutch of very interesting names that came out. Kokuyo Camlin, extremely strong numbers. I mean, a loss to a profit typically tends to excite the street. Do watch out for Kokuyo Camlin. Persistent, in line with a clutch of other mid-cap IT names. Fairly robust numbers. They probably haven't taken the wage hike. That's the clarity that we await when we speak to the management a bit later on Indian Open. And does that impact come back to haunt them in the current quarter? That's a question that we asked them for sure. But good margin expansion as well, from 10% to 12.5% lower than peers, but strong numbers. likely to react today, as also Shriram City. I think I was looking at what brokerages have said about this one. After quarters and quarters of a lackluster performance, Shriram City finally seemed like it was turning the corner. At least that's what the view of a couple of brokerages was. So watch out for this one too. These are amongst the 3 or 4 that I picked out of the clutch of names that came out with numbers over the weekend, over the long weekend. Last but not the least, new kid on the block will list today. Newgen Software issue subscribed about 8 times, likely to list at a small premium. So we will watch out for this one too in the session today.
All right, Niraj, thanks very much. That's the market setup. But this is the beginning of budget week. Of course, today will be the announcement of the economic survey. We're expecting that to be tabled in Parliament later today, and at 1:30, the Chief Economic Advisor, Arvind Subramaniam, will be talking to the country on what his key ideas are. And, to be fair, he has, over the last few years, presented a clutch of interesting new ideas. Ira's got, a list of things that she's hoping Arvind Subramaniam will announce today. Ira?
The mundane stuff, the exciting ideas always come from, Arvind Subramaniam's own thought processes, which have always been interesting over the last 4 years. But, apart from that, you always look to the economic survey to hear about what is happening in the economy. We're not going to spend much time. These are debates that have played out over the last couple of years. But some of the things that we'd want to hear on, we'd want to see what the CEA thinks of the fiscal consolidation roadmap, what he thinks of growth, what he thinks of the early trends under the GST regime. Last year, he had given some insights into how demonetization was playing out. I wonder if he'll have something to say on the early indicators from GST. The jobs debate, we'd love for the CEA to weigh in on the jobs debate, particularly now when we've got a new set of confusing data on the jobs front and the financialization of savings. That's something that's a hot topic here in Mumbai. I wonder if the economic survey will weigh in on that. Just very quickly going to run through some of the data points, and we'll discuss each of these in a minute. We know the fiscal deficit numbers. We want to see whether the CEA gives a view on whether 3% is sacrosanct or not. That was the FY19 numbers. What does he say about the growth picture on the other side? Does he feel that growth needs some support at 6.5% advance estimate? We'll wait to see what his analysis there is. We will wait to see again on GST numbers. Does he give us any sense of whether GST is starting to pay dividends or at least starting to stabilize? These are the numbers till the month of December in terms of GST collections. There has been some worry over the course of the last few months on whether those are keeping pace. Jobs, would love to hear him weigh in on the jobs numbers. We've got confusing indicators. The quarterly employment survey of the Labour Department giving us one set of numbers, and I've just put the last 4 quarter numbers because the survey was revised. But the interesting angle to that debate has come out with the Ghosh and Ghosh report recently, which analyzed the EPFO data to suggest that 7 million jobs will be created in 2017-18. Not everybody bought into that. A lot of people saying that this is formal sector job creation, plus it's not an indicator of net job creation. Going into a budget, into an election year, I wonder if the economic survey will give us any insights into job creation. And then finally, we will of course wait to see whether they have anything to say on new ideas. Financial savings has been, financialization of savings has been a big topic of debate. More and more money flowing into equities. Is the ecosystem ready, the protective ecosystem ready for money to go away from risk-free assets like deposits into relatively riskier assets like equities? All of that and more, Menka. It'll be a heavy document as always.
So I'm contrasting in my head what Uday Kotak said about the large funnel, all sort of going into a small...
I borrowed from his.
But equally what Larry Fink said, and I hope you heard this, at the WEF, about how there has to be some way that more people in the world can participate in higher growth instruments.
Absolutely.
Because otherwise you're never going to be able to give them what market men call the power of compounding, but the ability to actually, increase their wealth over a period of time, and they will always stay in the lower quartile as opposed to the higher quartile. But I don't know, jobs will be interesting, I would imagine. I'm not sure of whether he's going to reiterate the fact that the government has no clear data.
Well, there is data coming up, so I think the CSO is working on it.
Yeah.
But I really wonder whether he'll weigh in on the debate, because there's just so much noise around this jobs debate, and it picks up with one report or the other. And this Ghosh and Ghosh report is the latest one, which has got everyone talking. So it'll be good to get a CEA view on job creation.
New ideas. Are you betting on any new ideas?
Well, last time we got basic income right, and it threw us completely off center.
Not quite a new idea, but since then, basic income has sort of gathered currency, one might say, right? More and more people are writing about how it's the smarter thing to do.
Yeah.
So.
I'll tell you one thing I don't want to hear from him. Last 2 surveys, he's talked about using the Reserve Bank of India's reserves for various government expenditures.
I thought they said no. Didn't they send it back?
Yeah, apparently, but 2 surveys he's brought it up. So let's hope he stays away from it in the 3rd survey.
Well, all right, okay. So that's what you can expect from. No, well, not that's not what you can expect from the economic survey, but that's the setup going into the economic survey and going into budget week, right?
Yeah, but it'll be interesting to talk about all of this and what the industry wants, not just really from a markets perspective, but from an industry and commerce perspective as well. And who better to talk about this than Rashesh Shah? Yes, he's the president and of the industry body FICCI, and of course heads the Edelweiss group as well. And Rashesh, thank you so much for taking the time out and joining in. Now, we've given a bit of a brief setup as to what could come out and what are the factors to watch out for when it comes to the economic survey. What are you hoping to hear?
I think that the most important thing is the outlook on growth, because I think this is a year growth has started to creep back. We saw in the last quarter that GDP growth has started to come back, and I think all indicators show that on the ground at the micro level there is a fair amount of activity pickup that has happened. Of course, we have some headwinds in terms of oil price, and we have to see obviously what is the view on maintaining the fiscal consolidation path. But outside of that, I would say what are their assumptions around growth and what is outlook on growth, because the global economy is fairly benign. So I think exports should give a boost to Indian growth. And as I said, the Indian activity, especially in the consumer sector, auto sector, even housing has had a very good quarter. So we think growth is picking up, but it will be good to get a reinforcement from the economic survey.
I think so. In the mid-year survey as well, Rashesh, when they had spoken about these growth numbers, they had mentioned that when the real growth in investment 4.5, exports volumes aren't exactly buzzing, and there is a decline in credit to GDP ratio. In any of the last 25 years, if you go to look at it, we never had a growth of above 7%. Now that's turned out to be true for FY18. Are there any of the factors meaningfully changing aside the one that you said, which could lead the Eco survey to also project what the global bodies are saying, that 2018 may be a year of 7.5% odd?
Yeah, and if we get 7.5 and say inflation remains at about 5, then you will get a nominal growth of about 12.5. And actually from government, the fiscal point of view, nominal growth is more important than real growth. So if we get anywhere between 12 to 13% nominal growth, we've been averaging 11% for the last few years. So I'm hoping that if we get 12.5, then government's ability to maintain the fiscal consolidation path, but as well as spend, because this year government will have to still spend money, because we see that the private capex is still going to take some more time to pick up. And I think so government investment, government spending is going to be a huge driver on this. And I'm also, the other thing I'm interested to look at is what they say about the non-tax revenue. Because what we have, over the years we all focus on the tax revenue, indirect taxes, which is now actually outside the budget because it goes under the GST Council. But the entire strategy around direct taxes, whether long-term capital will come, estate duties will come, all those conversations are there. But I think what is even equally important is how they raise the non-tax revenue, disinvestment, asset monetization, all of that. Indian government is actually a fairly asset-rich government as compared to other governments in the world in emerging markets. Indian government has a lot of assets, and I believe that the time has come for us to start using the assets in terms of non-tax revenue in a very coherent and strategic manner.
I don't know. The question I would put when you say asset rich is all great, but we've had very little to believe that they have the gumption to go ahead and do the big divestitures that they need to. And I know that Air India is on the block, and I know that they've picked probably the most complex asset out there to sort of make a point. But when you sell HPCL to ONGC, Rashesh, you got to think, right? I mean, that's not asset divestiture. That's just finding a way to unlock money sitting on balance sheets of PSUs. So,
absolutely. And I think government has been very hesitant and diffident because of the past historic baggage and everything else. The entire Soot Boot Ki Sarkar has been a big overhang on the government's ability to really go all in terms of reforms like this. But outside of this, we are seeing, I think parts of this already happening. So if you look at, Piyush Goyal talking about saying, I don't need budgetary support because I've got assets, because railways owns a lot of land. If you look at, Nitin Gadkari also saying, I don't need money, I've got enough assets. So I think individual ministries, so there might not be a very holistic program, but individual ministries will start using the assets they have. So it doesn't have to be only, divestiture. It can be, the real estate monetization. Indian government owns a lot of land. So even developing the land, even developing it through PSU entities. You don't have to only use the private sector entities, but converting assets into income. I always give this analogy that you own a lot of land and you need to send your kids to college and you need to spend money on that. I think it is worthwhile to send some of the land, raise the money and use that for your college education for your kids. And I think India is at the same stage.
Yeah, well, Rajesh Jain, who helped advise Prime Minister Modi's campaign in 2014, has, put out there a thought process of how do you aggregate all the government land, the central government land, and find a way to monetize it. These are really difficult things to do, and I wonder why we aren't doing some of the lower hanging fruit first. But you got to give them some credit for the fact that they have at least exceeded, I think, or close to exceeding
their
divestment targets for this year. So
they've
always remember, this is a government that did, demonetization. That is as difficult as it can get. So if you can, I think this government knows how to do difficult things. They're thinking about Air India, and you see how easily we all accepted that Air India divestment is now, on the cards. So this government can do difficult things. I think if there has been one government that can take hard decisions and implement them, so I'm hoping that they will follow through on this.
What is the hardest decision? Let me put you on the spot. What is the hardest decision you think they should take in this year?
I think the hardest will be whether to maintain the fiscal consolidation path or allow that to slip a little bit. I personally think up to 3.5 is okay. I don't think we need to get to 3 given the year where we are. And remember, there is a strong headwind in terms of oil price. Whatever we say, oil price impacts current account deficit, oil price impacts government fiscal, spending ability. Given that, I think going up to 3.5 in the year like this and just maintaining the investment push, the spending push is going to be very important.
You don't think it dents our credibility, Rashesh? I mean, I get the point that it's the second decimal, etc. But as I think Subir Gokran had told Praveen Chakravarti in a conversation, I think he made a very valid point that when you set a rule, you have to be very careful under what circumstances you're willing to breach that rule. The more often or more easily you breach the rule, the less your credibility in the global markets.
Absolutely, and this government actually has actually maintained credibility. We have seen last 3-4 years, they have maintained the path to fiscal consolidation, but there are headwinds, and it's not that you are going from 3.2 to 5. If you're going from 3.2 to 3.5 and in that range, between 3 to 3.5, I think the world investors largely should be indifferent. There might be a short-term, shock to some people, but oh my God, credibility will get affected. But I personally don't think in this range, there is a real risk of credibility.
The bond vigilantes won't be up in arms and throw things.
It will always be there. I think a 3.5 equity investors will be very happy.
I'm sure.
Yeah.
But the bond investors will not be.
Sure.
I think I just wanted to add to that. I don't think that there is that much concern, at least based on all the conversations I've heard in the last week, on whether we go from 3.2 to 3.5. I think the concern and the interest is on how do we do that. Are we doing that through things like a corporate tax rate cut? Are we doing that through things like an investment in rural? So it's, I think, where we're giving away that 0.3% is what people will be watching very closely, more than the fact that we're giving away 0.3%. Sorry.
No, that was the only point. I was just trying to wonder if bond markets are already pricing in a 3.5, looking at the things, because equity markets certainly are.
They're pricing in 3.2. They're willing to take 3.2 for next year.
Yeah, 3.2 for the next year. For the current year, at 3.5, I would think bond markets are
Current year is taken out.
Yeah, so
for next year, I think they're okay with 3.2.
Yeah, so if 3.2 is the number, then I think...
Yeah, we're talking about 3.2 for next year. You're talking about FY19.
FY19.
Yeah, this year's 3.5, I think, is taken for granted now, right?
3.4, 3.5.
So if actually, in fact, the government comes in at below 3.5 this year, that'll be a good surprise for the bond market, won't it? Yeah.
And actually, if you see, the bond market is already ahead of the curve. And if the bond market is not looking at government fiscal as the main parameter, they are looking at oil price, they are looking at an uptick in inflation, they are looking at RBI stance on inflation and the MPC, what they are expected to do. So I think the bond market has already factored in all this. It's already done. The bond yields have gone up by almost 80-90 basis points. And so this has got priced in already. And I think hence it is easier for the government to be a little bit flexible on that and not be very hard-nosed about it, because if it comes at the cost of growth, then it's not really worth it.
Sure. Rashesh, tell me about the growth side. I mean, what do you think, the priority should be? Rural has been talked about a lot, rural roads, affordable housing, etc. Because they do have to address that jobs issue we were talking about. I don't know how many people take that 7 million number at face value, but...
I think so. But if you see the history of India, jobs has been an important factor, but not the most important factor when it comes to elections. If you look at elections, they are fought on corruption, they are fought on inflation. I mean, you go back to Bofors, you go back to 2014. The larger one, because ultimately jobs affect about 8-10 million people, while I think corruption, inflation has a much larger audience. So I think we should keep that in mind. This second thing we should always keep in mind, I mean, I'm all for jobs. I think jobs is one of the biggest problems we need to crack. It's not an easy one to crack, but we need to crack that. But I don't think it's such a major issue, especially in view of the elections coming up a year down the line. The other second one is there is always this difference between jobs and employment, because for some reason or the other, India, there is a lot of self-employment also getting created. And so are we measuring jobs or are we measuring employment is one of the larger questions we have to grapple with, because a lot of people who are self-employed, and with the new gig economy underway, where they are Ola drivers and all of that, it's very hard to really figure out where we are on jobs and where we are on employment. And I think our jobs data, our employment data, both of them are fairly broken. So unless we get clear data, we'll have to depend on anecdotal stories and all. I do think the issue is a real concern, but I think the larger concern will continue to be issues like inflation, corruption, growth, investments, all of that, because they affect a much larger constituent. They will affect 300, 400, 500 million people, while jobs will affect 8-10 million people.
Yeah. I've come back to the pakoda economy debate. I don't know. It took me like 24 hours to try and understand what is going on and why so many people on social media are talking about pakodas and frying and selling them. But
that's the gig economy.
Yeah, that's the gig. And just if you had to choose between a corporate tax rate cut, which is something that Finance Minister Arun Jaitley had promised right, off the bat when this government took over, and is still pending for large corporates, or let's say, we're breaching the fiscal deficit targets, but that's because we're spending more in rural India. Which one would you pick?
I would pick the corporate tax cut, because it's a promise that has been given, but more importantly, if you look at what has happened in the US, with the US tax reforms, and US has cut corporate tax rates in a fairly significant way, we expect it will be followed through by other countries, because I think everybody will have to ultimately match, because it's a very connected global economy. So given that, we being at 30 and 30 going down to 25 is on the, I think it is something we have to do. It will obviously not be a complete giveaway by the government, because it will, some concessions which are currently underway will also go away. So when you add up the whole thing, what the government will give away will not be very large. And if that gap for the government comes from an increased fiscal deficit, I think it's a good trade-off to make. It is a worthwhile trade-off to make, because it will be growth-oriented, and we think corporate, investments, capex is about a couple of quarters away. So a cut like this will also give spur to the animal spirits. We are seeing animal spirits are starting to come back. If you look at the kind of action on the NCLT cases, we are seeing a lot of those cases. We are seeing 4 bidders and 5 bidders, and people are willing to pay a full price. Earlier, the apprehension was that people will try and pay, very distressed price or liquidation value prices. We are seeing full prices coming in for steel assets and cement assets and power assets. So the animal spirits are just getting unlocked. I think the economy is on an uptick. We have absorbed the demonetization, GST disruption. It is starting to come back. At this time, a cut in the tax rate, even if from 30 you don't go to 25, but you go to 27.5, I think it will be a big boost.
Can I argue that a bit? I'm just wondering, what we saw happen in the US, and rarely have we seen India or Indian companies do this. You saw immediately companies give out these $1,000 bonuses, and a large clutch of them to their workers, effectively passing on the benefit of a lower tax rate to their employees and thereby boosting a consumption cycle. In India, typically a lower tax rate goes to shareholders, which is a small clutch of people which impacts beneficially the market, which is 1 or 2% of this country and not anybody more. Very rarely have we seen a company say, hey, I've got an effectively lower tax rate, I'm passing on the benefit to my workers or my employees, thereby sharing it with a larger community of stakeholders and therefore benefiting an economy in a larger sense. Don't we need, do we really need corporate investment at a time when there is so much surplus capacity? Are companies really going to put that money to work by building new plants at a time when there's so much surplus capacity, or is it all just going to get funneled into better stock market returns?
See, I think eventually this can be like an ideological debate that you can have, but eventually corporates are geared towards investment. I have seen very few companies whose main job is to give money back to shareholders. Companies are there because they want to grow, they want to invest. There have to be investment opportunities, and in order to spur those animal spirits, in order to spur the risk-taking behavior, and I think we are on the anvil of that.
But Rashesh,
I agree with you. The capacity utilization has been a big issue. But remember, global growth is coming back. Exports are on an uptick. Indian economy is also, consumption cycle has got revived.
And there is no lack
Given
of funding if companies want to put up infrastructure or new capacities at this point in time. Why do you need a tax rate cut for that?
The larger concern that for all capex has always been, it's not the funding of the ability to borrow, but it's been having the equity. So when you cut tax rates, the retained earnings go up. Those retained earnings are available for companies as the equity contribution for the new project, because you have to put equity and then you can borrow. So borrowing is available. I agree with you completely. But companies need to have retained earnings.
Equity is also available.
So
equity is also equity is not available in this marketplace.
So exactly for the same reason, when the animal spirits are unlocked, then the risk capital is available. So ultimately, the equity that you raise from outside or the equity that you have in retained earnings is what is called the risk capital availability for corporates. We need to expand the pool of risk capital that is available so that they can use that and start taking risk. I think we are anyway a couple of quarters away from there, because as I said, the animal spirits are coming back, growth is inching back, the global economy is doing well, all the ingredients are in place. At this stage, giving a small boost, giving a small push, which anyway has been expected because it has been promised over the years, would be very beneficial.
Okay, I won't argue this further, but I've just got to, I'll say this for you to consider, that between the optics of putting more money into the rural economy in a year ahead of the election and giving large corporations more money, unless they commit to being able to share it with a wider set of stakeholders, I would wonder if governments are more inclined towards the optics, not just the optics, but the beneficial impact of rural and rural India, which clearly has suffered the worst hit from demon and some aspects of the informal economy which are suffering from the impact of GST and all the transitional effects. So I'm just wondering, do large corporations need the hand-holding right now, or is it the small guys that need the hand-holding?
It's an ongoing challenge.
Yeah, I know.
And whenever we frame a question in an either-or, should you give more food to a malnourished kid, or should you give more money to corporates to invest? Then this either-or debate is always going to be.
I understand. Unfortunately, resources make it an either-or.
Yeah,
right?
No, it's not either-or. I think the job of the finance minister is to strike a balance, because we're also talking about jobs. Ultimately, companies invest money, they expand. When they expand, jobs get created. When they create jobs, people will buy houses, they'll buy cars. It will have a spin-off effect.
So you've got to look at what happened in the US, and I was stunned when right after the tax reform bill passed, the first thing companies did was pass that money out. I have never seen this kind of transmission. I've never seen it happen in interest rates in this country when RBI lowers rates and banks take a year to react. I've never seen it with corporate India. Almost always the people that benefit the most, are the small community of stock market investors. And so therefore,
as an aside, I would say,
I'll leave the argument there because I don't want to spend all our time talking about that.
But I must compare, as an aside and as a joke, I think transmission happens by the banks very quickly, but only on the upside.
Yeah, that's what I mean, right?
So half the transmission happens, the other half doesn't happen. But I think ultimately the economy is interconnected. There are a lot of linkages within the economy, and the answers are more complex. And that's why striking a good balance between corporate investments, giving money for rural investments, rural, consumption being spurred on. You have to strike a good balance around it. So I'm not saying give all the money to corporates, but I think corporates need to invest. That is, if not today, a year down the line, because last couple of years, government investment has been driving the economy, consumption has been driving the economy. This is an economy that cannot continue at this pace without the corporate investments coming in. And so we have to think about all the ways we can afford.
Maybe he'll make it a jobs-linked tax rate.
Oh, God.
It's my pet peeve. I'm so sorry, I keep bringing it up. But I'm wondering whether he'll find a way to do a tax rate cut linked to the number of new jobs you create over the next 1 year.
I think it's a fabulous idea. It's a fabulous idea.
Okay, so I'll just say that again, Rashesh, because every time I pitch it to the news.
Why not? It's an offshoot of investment and growth. Why do you need an incentive to create jobs, sir?
The reason is...
You will create jobs when you invest.
The reason is you can make investments.
I was winning for 30 seconds.
The reason is you can make investments which don't create jobs, but are still investments, and you can create investments which can, like for example, textile or housing creates a lot of jobs. But there are other industries which may not create jobs, which are more automated or process industries. I think in India we have celebrated, GDP growth, market cap, FDI, wealth creation. We have, the billionaires list. We don't have the job creators list. So absolutely, we need to start focusing and sending the message out that you make investment, but also make investments in a way that also create jobs. Now, again, it will come back to saying, how do we get the jobs data? How do we do all of that?
Also, it's terribly complex. You're then, leaving out, like you said, consumer companies that may not be very job-oriented companies, more manufacturing.
And you're, skewing
the complexity of it.
You're also skewing the nature. For instance, if the need of the hour is to start moving towards technology and training people to be able to do that technology, you suddenly have this jobs link incentive that isn't the industry getting pushed back.
Additional. But just imagine the optics of it in a year before the election.
Rashesh,
I will give you a lower tax rate if you create 100,000 new jobs over the next 2 years.
If you see all over the world, I think the central bankers, the prime ministers, presidents of countries always talk about jobs. If you go to the US and a small county and you are creating 80 jobs by putting up the governor of the state comes out there to... So I think everywhere jobs are clearly, in a very articulated manner, being given a very important place. And I think in India we need to start doing it. How we do that, there are various ways of doing it. But absolutely, I think creating jobs is a
dozen and more states in the United States offer tax credits if you create a number of jobs of more than X%. So if you create more than 1,000 jobs, you will get a certain tax credit.
My point is that there has to be underlying demand for investment to create a capacity or something which then gives jobs. So you come back to the same circle, right? Do you first spur consumption and hence investment and hence jobs, or do you do it the other way around? I'm not sure.
I agree. Maybe the money is better spent in the rural economy, which is really the most stressed part of the economy. But kite flying is the theme of the season this week at least. So
I just have one last question. We're slightly off of time as well. But Rashesh, let's assume that there is room for expenditure to grow because there is a more benign receipts environment in FY19 compared to FY18. What is that one big black ace of spades that he has? Is it divestment, 1 lakh crores, or is it something else?
I think divestment is the biggest ace that the government has. The markets are good. Assets are in demand, including land, because I think, as you know, in India, getting land is it's not very easy. Housing is starting to come back. Affordable housing is a big one, so government can allocate land for affordable housing, which has then spin off other benefits. So I think asset sales, whether divestment as well as sales of land directly, indirectly through government companies, could be one big way where they can raise maybe another 100,000 crores.
And therefore, if divestment is the big one, would it be counterintuitive to get in LTCG at a time when divestment targets are high?
I would call it non-tax revenue, not just the divestment, which is a part of non-tax revenue. So I would say non-tax revenues, if you can increase your non-tax revenues by 1 lakh crores, I think it will make a huge difference because you can do all the spending you want. It will offset the oil price increase headwind that you have. So non-tax revenue is, and exactly for that reason, I think any change in the long-term capital gains or any capital gains is not warranted, because this is, again, ultimately equities investing is also about fostering risk-taking behavior. We need this year for individuals, for companies to take more risk. We need to encourage risk behavior so that people can invest and take risk and grow the economy. So I think tinkering with that at this stage will be counterproductive.
But why can't risk be more than 1 year risk? Why does it have to be
Change
1 year
the
risk?
timeline.
Why can't it
come
be
back
3
from
year
Davos
risk?
in full.
No, but really, why can't it be 3
can be,
year
and
risk?
actually,
And prospectively. I agree with you 100%.
I'll be honest with you.
Yeah, if you make any change, make it prospective.
Maybe quite a few people in the stock market or investor community may not be happy with that. But I say between 1 year and 3 year, I don't
3 year
think
makes sense.
eventually it will make any difference. This year, you don't want to destabilize anything. You know, we have
So
gone
do it
through a
prospectively.
lot of changes. So if you can postpone it by a year, it won't make a big difference from the revenue point of view. So this is the kind of thing you are sending a signal, but it will not have any impact from the revenue. It may be a couple of thousand crores is the revenue impact of that. So changing it for making a signal, you can do it after a year. It will not change the financial structure in any material way.
That's true. That's 100% true. I think it's a very small amount, effectively, or we assume or estimate to be a small amount. We don't know anything more. I know we have a couple of more questions. Very quickly, if we can put you, how is this whole NCLT process going in your estimate, Rashesh? Because, you know, I think one of the critical things every corporate is looking at is either being able to consolidate within their industries using the NCLT process, and of course, the deleveraging of banks, you know, not deleveraging, but the uncluttering of bank balance sheets in that sense.
So if you see, you know, the banks have made large part of the provisioning cycle is over. So
Right.
because this entire NPA cycle starts with provisioning, then you resolve and then you recover. So I think NCLT is for the resolution process and then recovery process. The provisioning part, because of the AQR that RBI did a few years ago, I think the provisioning, we are about another 3-4 quarters away, but the provisioning cycle will be over. So in a way, the mark to market has been done or almost being done. Now the actual resolving it, restructuring, selling assets and recovering has started. I think the NCLT process is going fairly well in India, and actually in all countries. Whenever you have a new law, it will get tested, because however well you draft a law, in real life it will get tested, because there will be, you know, very specific circumstances, very individual characteristics of every deal that will come about. I think that is going through. The NCLT process has run very well. I'm actually very, very positive. It has stuck to the guidelines, it has stuck to the timelines, and it has worked very well. I think we will see the first asset sales happening, because already a few have started happening. We had things like Murli Cement, Binani Cement have got sold. I think all the steel companies are now you know, getting bids. There is a lot of expression of interest from a lot of companies. I would expect between March and April is where the bids will come in and get finalized, and will take another 3 to 6 months for the closure of that, because you know, you have to get all the government approvals, competition commission, all of that. So I would say before the calendar year 18 is over, at least about 20-25% of the NPA cases would have been resolved.
Linked to that, Rashesh, I mean, so now that the cycle is fully in place, etc., we've had the recap, etc. Without getting into deep debate on it, is it time to signal banking reform as well? And what they announced 2 days back was not reform.
Absolutely. I think actually banking reform needs a much broader conversation. There have been reports, you know, there is a PJ Nayak committee report, and there have been a lot of other reports. There is already Indradhanush reforms were there. I think there are governance reforms, there are management reforms, but there are also structural reforms, including, you know, digital and all of that, because I think we need a much larger reform approach to banking. And I would also say, actually, we have gone beyond banking. India, now we need financial sector reforms, not banking reforms. Because I think all this is interconnected. Insurance companies, mutual fund, capital market, bond market, banks. And as I think quite a few people have been saying, we are moving away from a bank-centric financial services structure to a financial sector where banks play a role, but NBFCs, housing finance companies, ARCs will also play a role. So I think what we need is a very global blueprint on reforms for the financial sector, which develops the bond market, develops project financing, all of that. And because in part we have had, you know, PJ Nayak committee report, which is a fabulous report, but that's only about governance in banking, which is a part, which is a subset. But I think if we take this opportunity and go back to the drawing board, we should set up what I call financial sector reforms and see how this is interconnected, how much money, household money we want to divert towards insurance, how much towards capital market, and have a very global game plan on that, and then implement reforms accordingly.
Yeah, and there cannot be a more opportune time to do that than now, when the trend towards financialization is so emphatic. Thank you, Rashesh, for joining us
Thanks
this morning. Thanks for a very well-rounded conversation going into budget week. So, Rashesh Shah there, the head of FICCI, and of course the Edelweiss Group, talking us through what he expects will happen over the economic survey and the budget.
Take a break on that note. Come back with full tilt towards the day's trade.
हमारे पड़ोसी मेहताज हॉलिडे के लिए अब्रॉड गए हैं। हम कब जाएंगे?
उसके लिए पैसे कहाँ से आएंगे?
लेकिन मिट्ठू इन्वेस्ट और उस पर इन शुक्ला जी की जिम्मेदारी छोड़ गए हमारे सर।
एफडीज में इन्वेस्ट करूँ क्या?
अरे मिट्ठू जी, आज के जमाने में इन्फ्लेशन के बाद एफडी रिटर्न से हाथ में क्या बचता है? ईटीएफ में इन्वेस्ट कीजिए, जिससे लॉन्ग टर्म में मिलते हैं स्टॉक मार्केट जैसे हायर रिटर्न्स, यानी इन्फ्लेशन का कम असर।
लेकिन स्टॉक मार्केट तो ऊपर नीचे होता ही रहता है।
ईटीएफ लॉन्ग टर्म इन्वेस्टमेंट के लिए बिल्कुल उपयुक्त है। ये देखिए, हायर रिटर्न्स, इन्फ्लेशन बीटर एंड नो टैक्सेस। ईटीएफ में निवेश कीजिए और देखिए हाथ में कितना बचता है। भाभी जी, जरा कोकोनट ऑयल देना।
ETF investments are subject to market risks. Read all scheme-related documents carefully.
आइसक्रीम खाएगी?
आइसक्रीम? ये है डबल आनंद। पहला आनंद पॉलिसी टर्म के अंत पर मैच्योरिटी क्लेम का पूरा भुगतान, और दूसरा आपके अपनों के लिए लाइफ कवर की पूरी रकम बिना किसी प्रीमियम के। LIC न्यू जीवन आनंद, आनंद ही आनंद।
व्हाइट शर्ट्स कितने प्लेन और सिंपल। फॉक्सेंट प्लेन और सिंपल व्हाइट शर्ट को बना दे स्पेशल और फैशनेबल। फॉक्सेंट, न्यू फैशन वेयर फॉर मेन।
What do we want from our country today? From the economy, from the politicians, the policymakers?
Do we want a better deal?
Maybe more perks for smaller businesses or large businesses or any businesses.
Do we want it to be easier to create something new?
To find the job of our dreams, to create jobs for dreamers.
Do we want growth? Not just for the sake of growth, but for what it represents.
Not just numbers on a graph somewhere, but prosperity that we can see, touch, feel.
These things we want.
Can we expect them realistically?
It's time. Time for us to accept less and expect more.
Time for us to get on the path to confidence once again.
Time to go from making promises to keeping them.
From manufacturing slogans
To really making in India.
From a promising economy
to a delivering economy.
Can this budget mark a return to confidence?
Watch Budget 2018 with Bloomberg Quint.
Good morning, you're watching IndianOpen. I'm Pradeep Pandya. Let's have a look at how Asian markets are doing. 11,130 on SGX Nifty. That would be about 60 to 80 points higher than where the Nifty futures actually closed in last session. So we are all set for at least a strong beginning of the day's session. Nikkei is up by around more than 100 points, although other markets are not doing that well, I guess.
You reckon the chart setup looked positive enough for some more upsides, Pradeep, and we're likely to start off 0.5% higher?
Definitely. So right now, I mean, chartists who are looking at price, they feel that momentum is on the higher side. You can hold on to your long positions without bothering about anything else. But those who look at oscillators and that they kind of try and do a bit advanced technical research are confused because the historical oscillators are not seriously working. Everything is overbought, including the put call ratio on the first day of the session. I mean, I have no comments on that basically because at this level you would like to short, but in this market you just can't short.
Yeah, and positioning from the foreign institutional investors is just so much on the long side as well. Okay, now before we get in our fundamental guest, let's just tell you a brief setup of what are the key stocks to watch out for in the session today and get into our research huddle to talk about all of the key numbers that have come out post-market hours and the stocks in news as well. Needless to say, the two that stand out the most are the two large caps, Maruti as well as Avenue Supermarts, but a clutch of other stocks in news as well. And Yatin Agam as well as Shraddha joining to talk about that. Let's start off with Maruti though, guys.
Neeraj, the numbers for Maruti came in largely in line with the street expectations. In fact, if you look at the sales, that saw a growth of nearly 14%. Of course, there was 11% growth in the overall volumes, which means that the realizations for the company grew by nearly 3% odd. EBITDA also saw a growth of 22%, and profit, because of the higher base last year, saw a growth of only 3% on a year-on-year basis. Of course, the biggest factor you would watch out for will be the margins. They came in at 15.8% versus the street expectations of 15.5%. So good performance on the margin front, despite the fact that raw material costs as well as promotional expenses were quite high during the quarter ended December. Of course, moving forward, the management does expect that the margins could be under pressure because of higher commodity cost, and realizations more or less would remain at current levels. Of course, which means that they will not be able to pass on the entire price hike that one would ideally do. Of course, the ramp up at the Gujarat plant is going on nicely, and also if you look at the increase in effective taxes and lower operating income, because of that, the overall profit growth was slightly muted, but largely in line with expectation is what we saw as far as the third quarter earnings for Maruti.
Brokerage is upbeat, I would reckon.
Yeah, so most of the brokerages have rolled the estimate. So everybody, more or less is at a higher target price, close to 9,800, 10,000 odd levels.
Yeah. So that's Maruti. For you, Agam, what do you have for us?
Well, Avenue Supermarts, very, very strong quarter. We're seeing about a 22% growth in revenues, EBITDA margin expansion to around 10.3% as against 8.6%. Consequently, we've seen profits move up by as much as 66% on a year-on-year basis. We've had some brokerage notes coming in, and a lot of these brokerage notes are suggesting that these earnings are way ahead of their expectations. I'm going to start off with HSBC and Avenue Supermarts. They have upgraded the stock to a buy from hold, and they raised the price target to 1,600 from 900. Remember, the stock closed at around 1,150 odd levels last Thursday. They've said that Avenue Supermarts the earnings have been significantly ahead of expectations with a substantial expansion in margins. And Edelweiss, on the other hand, has maintained a hold with a price target of 1,290, which is still above the current market price. And they say that the benefit of the gross margin coupled with operating leverage has aided DMart, and store expansion seems to have slowed a little, but this is again largely in line with their strategy, where DMart has suggested that they will only look at store expansion if it is absolutely profitable and not for the compulsion of store expansion. So a lot of these factors have been factoring in, considering that Edelweiss maintains their hold on Avenue Supermart.
Yeah, if at all anything doesn't go work with them, it's probably the valuations, but robust performance. Let's see what happens to the stock today. Shraddha, what about the others?
A couple of names, 6-7, just run through quickly. FTC Limited, which has received GMP approval from the UK drug regulator for the Valuch plant. Pratap Snacks, which has signed a new contract for third-party manufacturing for potatoes chips. Havells India will set up a new consumer durables facility in Rajasthan with a total investment of 360 crores. Amrutanjan Health, relatively illiquid counter, but they will consider stock split on 13th February. Hindustan Copper, which will consider raising of funds via QIP. FM Industries, which has said that the plant and machinery have been damaged in the fire incident at the Hosur unit, so some negative reaction likely there. And a PTI report which states that JSW Steel may double its bid for Bhushan Steel to 30,000 crores. And lastly, a surprising bulk deal where Vakrangi picked up 0.5% stake in PC Jewelers.
Yeah, they've given to their benefit a statement as well to that effect. Anyways, all three of you, thank you so much for joining in and giving us those perspectives. Well, so that's about all the key stocks in news today. Pradeep, very, very interesting to see what, amongst others, Maruti does, right? Every time we hear a good quarter from Maruti, the target prices get rolled over, and almost all foreign brokerages have, while they've maintained their buy call, they've upped the target price quite heftily.
Definitely, at least to some extent, I would say everyone has hiked prices, although it varies. Avenue Supermart was another interesting upgrade, I think, and we'll talk about it. I think Sandeep Jain, Director at Tradeswift Broking, is joining us now on the show. Sandeep, good morning. First of all, what's your comment on Maruti?
I think Maruti is a good perennial long-term story, and the results were good and the margins also increased. But what I feel is, again, the valuations are also not that very cheap. So it's a pure long-term story. So one who has already bought it, he can certainly hold it. But for a new entry, I think one should certainly wait for some correction. But otherwise, for a pure long-term story, it's a good story, and certainly I see a price of around 13 to 1400 in, say, years' time or so.
Okay, so that's the call on Maruti coming in. But let's move on to the technical and derivative side of the market. Gaurav, Bissa, derivative analyst at LKP Securities, is joining us, and also Mukesh Singh, head technical analysis at Nila Financial Services. Good morning, both of you. Gaurav, first of all, what we were talking about before you guys just came in, record levels probably on put call ratio at this point of time on the first day of a new series. How do you really play that series, which is also full of events where VIX is at high? Where do you go, long or short, if you have to prepare a strategy for the entire series?
Good morning. Well, this is something unprecedented, where we have seen that VIX has been rising. So if you look at last 4 to 5 events, we did not see VIX moving up too much the way it's moving right now. And along with that, Nifty is also moving quite substantially. It's at a record high level, as you mentioned. But there is not an iota of negativity that we see in the markets. Even when there's a small dip coming in the Nifty or the Bank Nifty, we don't see too much of short positions getting built or long unwinding happening at a higher rate. So the trend is quite strong. The ideal strategy would be, because we are in the overbought zone, because the PCI is also at higher levels, because the VIX is also at a little bit higher levels. So the ideal strategy would be, once the event is over, there is a possibility we may see a small dip coming in the markets. This is what everybody is anticipating, a small dip coming in the markets. It might not be 500 points on Nifty, but at least a break that will be applied on the markets. So on that front, buying a deep out of the money put option would make sense. It's very difficult to pinpoint where the markets will actually stop. We have moved 500 points, 600 points in last 10 days or so, and there's no resistance in the side. So for the time being, participate in the rally. As we approach the budget, I think it would be prudent to buy put options that will also hedge your portfolio. Not exactly hedge your portfolio. Hedging is used with the futures, but at least it will ensure your portfolio, give some amount of insurance to your entire portfolio. So I would buy put options as we approach the budget. But for the time being, I think being positive on the markets would be the ideal way to go ahead.
Okay, Mukesh, we will take a detailed Nifty call in a bit, but just a very quick analysis right now, Mukesh. If somebody is looking at the markets today, 0.5% higher, is it a good time to go out and initiate a fresh long?
Good morning, Niraj. Initiating fresh long, yeah, I mean, if it starts moving, it starts crossing initial 15-20 minutes high, then once again one can take a long position, because this has been the kind of a momentum market which we have not seen for many years. And one can keep a stop placed below 10,950, and yeah, one can still take a trade on the long side for a target of 11,350, 11,375.
We'll take in the detailed call in a bit as well, Mukesh, but this is the broad call of Mukesh on your screen, a target of 11,345. If it crosses higher levels at 15-20 minutes later, maybe go out and initiate some fresh long positions. I know people are waiting for Bloomberg Edge, but maybe just take in the stock calls from our technical experts first before we go on to Jayesh. And Gaurav, to you first. Your 2 stock recommendations at this hour.
The first one would be Escorts. We have seen good amount of long positions getting built in the previous series. The rollover data has been quite good. There's a breakout on the weekly charts. Everything augurs well for the name. One can play for 860, 865 kind of levels coming in a day or two with a stop loss of 830. One can buy current series Escort futures. Second will be buy on Hero Motors futures. Again, it will be a little bit of a preemptive call. As a strong support at 3500, 3530 zone. Using that as a stop loss, so one can buy Hero Motor for targets of 3700. Once that is sustained, I would not be surprised with a performance of 3800 being crossed in next few trading sessions. That is one that should be on the radar.
Okay, so these are the 2 stocks that Gaurav is looking at. Mukesh, what would be your top picks this morning?
Since we are expecting a continued up move in the overall market, so I have focused more on the leaders. First stock is to be bought is Reliance. It has crossed a clear ascending triangle on the upside. A pullback area is placed around 960, so one can go long around 966, 967. The stop is to be placed below 952, and on the target of the upside is seen around 1020-25 in next in 10-15 days. Second stock which you have covered is ICICI Bank. Buying is to be done around 361. Stop is to be placed below 349, and target on the upside is seen around 390.
Okay, time for Bloomberg Edge. Jayesh Johnson with a call that the trender indicator has on Escorts. Jayesh, good morning.
Morning, Niraj. I believe one of the earlier guests also had the same stock. Now, on Thursday, we saw that Escorts did move up on high trading volume. And with that, it has now crossed above the resistance of the trender line, which has given a buy signal. First, let's have a look at how the trender actually works. It's a proprietary Bloomberg indicator which uses the average true range concept as one of the inputs to the calculation. It generates buy and sell signals and also helps you to manage the stop loss. So, how you interpret it is follow the color. When it flips from red to green, you go out and buy, and the other way around, you go out and sell the stock. Now we have a buy signal on the stock. That is because you can see that this red line, which was a resistance line before Thursday, that has been taken out, and the stock has actually climbed above this, and therefore we have a buy signal on the stock.
And efficacy, Jayesh, very quickly.
49%, Niraj.
49% hit ratio on the trender on Escorts. So do watch out for this one. Could have a good day in trade. Thanks a lot for that, Jayesh. I was looking at stocks which could likely react to results as well. We were speaking to Sandeep Jain about Maruti Suzuki. There are a clutch of other good names that came out with numbers post-market hours and over the weekend. Sandeep, what have you made of this whole mid-cap IT pack? And one more that added to the good set of numbers list was Persistent Systems. Do you guys track this one?
Yeah, certainly. Persistent is a persistently good performing stock, and I feel that mid-cap IT stocks certainly will do well in the coming quarters because of the growth seen in the global markets also, and the tax cut will certainly benefit all these IT companies because the consumption might go up in terms of the softwares also. So I feel that one should certainly be invested in the mid-cap IT space, and the way all the big heavyweights of IT sector has done well. So I think there is good valuation comfort in the mid-cap IT space also. Even Persistent, Cient, or stocks like KPIT. So these stocks can really do well.
Okay, so that's a bullish call coming in here on mid-cap IT. But what's your view on Avenue Supermart, Sandeep? The best report I have seen is from HSBC, where the target is now revised to 1600. And one of the reports that I read is talking about 40% plus earnings growth for next 3 years or so. Do you think these valuations are really justified?
Yeah, Pradeep, you have really ended the question in a very right note. In fact, I don't think that these valuations are really justified. I'm really afraid, but then all the marquee names are associated with the company, and the company is actually doing very well. It's not that they are not performing, the numbers are super, but then everything has its price and value, and I feel that at these levels there are better options to enter into, and one can certainly get into ITC. Why not? The valuations are so cheap there, and they are trying to get more into FMCG. So but then it's not the right comparison. But overall, I'm not very, very bullish about retail story, because the way things are getting bad in the West. So it doesn't mean that though this particular listing has changed the whole scenario of all the retail stocks on the stock markets, but still I'm not very confident about all these stories. Though it's a very good name, very good management, excellent performance, all these are good, but still I would not buy the stock at these levels.
Interesting. Okay, Shriram City came out with an interesting set of numbers. Sandeep, do you guys look at it? Because I thought after a series of very poor quarters, it came out with numbers which signaled a bit of a turnaround.
Yeah, it's an interesting name though, but then the competition is also very stiff. in the sectors that is dealing in, but then the name is good. And I think one can hold on to the stock rather than a buy, because there are lots of better options in the NBFC space where one can certainly look at. But I'm bullish about Manappuram Finance in this sector.
Sorry, did I hear you say that you guys are bullish on Manappuram Finance?
Yeah.
Okay. Well, Pradeep, valuation certainly in their favor, if not anything else. This SFBs and the gold loan companies, the valuations certainly look okay.
And also the diversification, which turns them into a more diversified NBFC than the gold finance companies as they used to be. In any case, gold is moving up, so that's the biggest tailwind that gold finance companies really look for. But how are we looking at the market this morning? A gap up, strong gap up, so to say 11,121. That's the level on SGX Nifty. Close to 11,100, maybe that's where we could see an opening. Shanghai has slipped a bit, but look at other markets. Nikkei is still up by around 110 or so. So that's a strong opening that we are looking for. Let's see what is the first quote coming in. The first tick is actually down, but now normalized 11,100, 105 rather. Sensex is up 380 points in early morning trade today. Let's look at some of the key gainers. In the index, we have Adani Port, that is up by around 8.5%. These are just few early quotes coming in, but Adani Port has got a good volume, 5,000 plus shares. That's interesting. Tata Motors, Eicher Motors, so auto is positive. Even Maruti is up after strong numbers and the upgrades that have come in. What else is moving up is L&T. You also have Wipro up by around 1%. HP, BP are also moving up, and so is ONGC. So oil and auto, these are two most interesting sectors as far as the index is concerned. On the negative side, you have Dr. Reddy's, TCS, both down. TCS down 9-10%, Tech Mahindra down 2%. I don't think this will happen. So probably index will move up further above 11,100 once these few stocks kind of normalize.
Yeah, so well, certainly all over the place, the rates currently, they will stabilize. Let's bring up Avenue Supermarts. Just want to see what that stock is doing. About 3.5% higher. Cocoyo Camlin, Persistent Systems, amongst other names that we should try and see. 3.5% for Cocoyo in the initial rates, Persistent flattish. And then two QIP boys, Deepak Nitrite and Sanghi, both of them, the QIPs of course happening at a much lower rate, naturally so. Deepak Nitrite about 1% higher for now. These rates are liable to change. Sanghi, couple of percentage points higher. For now, these rates too are liable to change. So let's wait and watch what happens to almost all of these stocks. But start certainly pointing towards a bit of green. Bring up the currency once and just see what's happening there. 63.59 versus 63.54. So about a 5 paise drop really. Nothing too dramatic for the currency today. Okay, Saloni Dhanuka joins in with the big brokerage calls for this morning. And Saloni, we've already discussed Maruti, but what is on your radar today?
So first up on brokerages, I have Jefferies on KEI Industries. Now they initiate buy with a target price of 620 rupees, which implies a potential upside of over 50%. Now KEI Industries is one of the top 4 organized players in the cable and EPC industry in India. They believe that company is playing out on capex, consumption and engineering exports, and hence they expect strong re-rating in the next 12 to 18 months on 30% earnings CAGR. Elsewhere, rising retail and export share in cables along with GST and industrial capex remain some of the key positives for the company, and they expect KEI to gain market share to 15% in next 2 years versus 11% in FY17. And the bull case target price for KEI according to Jefferies stands around 799 rupees, which is almost double the current market price. So secondly, we have Axis Securities on IG Petrochemicals. They initiate buy with a target price of 860 rupees, which implies a potential upside of 20%. Now the company is the largest manufacturer of phthalic anhydride in India with a market share of 49%. They believe that domestic industry is expected to grow at 6 to 8% per annum over the next few years, while acquisition of new business and capacity expansion will help the company in volume growth according to the note, and they expect capacity utilization to be over 90% in the next 1 year, and hence they expect revenues and net profit to grow at a CAGR of 13% and 32% respectively over the coming years.
Thanks, Aluni, for the update. So these are some key brokerage calls to watch out for. Jefferies on KEII. That one is really interesting. The bull case scenario actually gives us 100% higher target, 800, almost 800 versus the current price of around 400 or so. KEI has not really been an underperformer. If you look at last 1 year or even look at last 2 to 3 years, this stock has already given us good returns, and over and above that, look at it, it's up 200% already. So 3x in last 1 year, and you have a target that says 2x here on is possible. Sandeep, what's your view on this one?
Yeah, Pradeep, actually, I've become a bit cautious about all these mid-cap stories because 3x, 4x, these are not normal kind of returns, and these companies are like rightly valued now, but then we can see the growth also, and lots of compliance and governance will be seen in all these small caps and mid-cap ideas. But still, at these levels, we are actually suggesting our clients to be more cautious and to be more, focused on the blue chips and the larger caps and the extra larger caps.
I think we interact with the management on Thursday, post the numbers as well. Not a bad quarter. And frankly, while a 3-year chart showed you 180% returns, if you look at, I think, the last 5 years, the stock used to be a 16 rupee stock. This is a 3-year return, 612%. I would guess the 5-year return would probably look similar as well. Yeah, look at that. It used to be a 16 rupee stock, I remember. And during those 2013 times when industry was going through a bit of a pain, this one still did about 1250 crores of top line. And people were wondering, why is it that a real company like this with a proper business is not gaining the valuations that it should? It's been a dream run for KEI, but of course, Jefferies believes there is more in store.
That it will be 50 bagger. It's 25 bagger already from those levels. For somebody who bought 5 years back, it could be a 50 bagger. That's the belief Jeffrey has. Well, let's move on and look at some more interesting results. Cocoyo Camlin, I think, was yet another number. There's a turnaround. EBITDA is up almost 5 times or so. Margins are now close to 8.5, 9. Stock is likely to open higher by around 5%. Sandeep, are you tracking the stock? Any calls?
Somehow, Pradeep, actually, very frankly, valuation-wise, I'm not very comfortable with the stock. But then, previously the quarters were also not good. But then, since it's a turnaround case, so the stock has also actually performed in the last few weeks. So I will not be very comfortable for buying at these levels in this.
Okay. Fair call. Now, 6 minutes gone. We are just about a couple of minutes away from the pre-open rate settling down. As things stands, looks like, well, I don't know why it's pointing towards a flattish start. If anything, and if the global markets were to be believed, we'll actually have a start which is fair bit in the green. Somehow, the pre-open rates don't seem to suggest that. Let's wait and watch what happens. Now, Mukesh, as I said before, we'll take a detailed call today. With an assumption that the Nifty starts off at about 11,125, actually slightly lower than that, 11,110 or thereabouts. Is it a good level to go along, or would you wait for those 10-15 minutes trade to happen and then take a call?
Nirav, it's always advisable to wait for initial 15 minutes before taking fresh position for the day, especially when the markets are set to open a gap up or gap down. So that's a very healthy strategy to incorporate when one is taking a short-term position. As far as longer-term charts are concerned, then in last few weeks discussion we had mentioned about this resistance trend line of the rising channel, and against all odds and against all expectations, the market has in fact closed above the resistance trend line of this rising channel of last few months, and this is something a humongous development which has happened on the charts. When we look back on the charts in the around 90, 91, 92, I'm talking 30 years back, the same thing used to happen had happened in those particular times, and at that time also one thought it's too overbought. But 3 months down the line, one saw Sensex doubling in price in 90, 91, 92 kind of period. So I'm not saying that we are sitting at that current juncture, but it does seem that when the path of least resistance is on the upside, And when we are dealing with some kind of blow off, then anything can happen. So if one can keep a stop loss around 10,775, and if one is comfortable with that kind of stop, there is still a lot of room on the upside around, as I said, 11,345 seems to be the immediate target.
Okay. By the way, as the pre-open rates have settled, not surprised though, while we didn't talk about it earlier, on the NSE 500 or the Nifty 500, Bhushan Steel is the top gainer. And, you know, it's interesting. We were thinking about whether or not these assets will get fair valuation. Seems like now there is a rush for buying into select assets which may be strategically located otherwise. Bhushan Steel certainly a case in point here. The bid was very interesting.
You know, but what surprises me really is why should PSU banks open in red in that case? Because I think they would be the biggest beneficiaries. While you don't know what would be the final terms, if you buy the Bhushan Steel share today, how will it be valued, you know, post-acquisition? Because there could be so many, I mean, the capital structure could be complex. There could be some reductions in equity or anything like that. So, but PSU banks definitely are discounting at least 60 to 70% kind of haircuts. And now if you think that the haircuts are not going to be that deep, or maybe there may not be any haircut for some of the assets, looking at the demand, then I think the PSU banking is the first pocket to recover.
Yeah, it used to be a large portion of the stress, yes. Let's see if the markets believe that all of these assets will get the bid or no. So we know for a fact that Monet, there is only one bidder, and therefore the bid may not be as aggressive. The key is that that same bidder is now making a pitch for what is arguably one of the second most prized assets within this space.
So, you know, I remember what Arundhati Bhattacharya told me in one of our last interviews that I had done, that we are a country which is short of power, which is short of steel. So you just need to keep these assets in good shape. And over a period of time, they're got to turn around. There is no way that you can lose money by setting up a steel mill unless there is an issue with the capital structure, it's overvalued or
high debt or whatever.
High debt, yeah, something like that. So that could be one, you know, the only concern rather. So with now economy looking up, I think other sectors should also do much better, unless there is a clear case of gold plating that might be in certain cases, and therefore the asset cannot really be priced at the you know, the value at which it's sitting in a bank's book.
Yeah. Should be interesting. Anyways, we'll get to know all about that in a course of couple of, or maybe this current quarter. But for now, minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. HDFC, Tech Mahindra, Inox Leisure, Arcom and Wockhardt are amongst the companies set to report their third quarter results today.
And strong numbers coming in from Avenue Supermart, Shriram Transport, APL Apollo Tubes, Kokuyo Camlin, and also Bulgaria Industries.
And that stock is up 15%, interestingly. Okay, Persistent Systems and Future Supply Chain also report a strong set of numbers. Both the stocks starting off mildly higher. Tata Coffee and Divi's Labs disappoint.
Well, Vakrangi buys 20 lakh shares of PC Jewelers, and ICICI Prudential AMC checks into IDFC. So these are two more stocks to watch out for.
Well, Symphony, Canara Bank and Sequence Scientific are amongst the companies set to meet investors today.
And ICICI Direct initiates coverage on TCI Express with a price target of 660 rupees a share. Axis Securities initiates coverage on IG Petrochemicals with a price target of 860.
And I dare say, watch out for KI as well. Jefferies of late has been very good with their mid-cap calls. Let's see if this one reacts or no. But it's not a stock like HEG and Graphite, which is coming out of the woods. It's been a performing stock. Let's see what happens to this one. Gaurav, Bissa, if I just look at what's happening on the Nifty 500 and the Nifty 50 names individually, Maruti is set to start off about a couple of percentage points higher. Bharti Airtel is the other one, Gaurav. We don't normally talk, but about a couple of percentage points lower, some more tariff revisions. So there's a fundamental reason. But from a trading perspective, how do you approach Bharti?
Bharti has been seeing strong short portions coming in. Having said that, it's just about trading near the support level. So I would not be too aggressively short in the name. Rather, I would buy if you get it around 440, have a stop loss of 435, 434. Play for a bounce back. Don't play for a reversal. The bounce back can be around 455 to 460. It will again be very difficult for it to sustain those levels. For the time being, I think buy a little bit lower, around 440, stop loss of 434.
Okay. So that's the call on Bharti. Sandeep, Jain, we'll talk about it in detail, but if you had to pick one stock from an investment perspective right now, what would you buy? A large cap or a mid cap? And if so, which one?
Yeah, I would go for a large cap rather, and I think I'll be trying to be a bit bullish on the pharma sector because previously we started getting bullish on these defensive sectors in IT. So this time I think the way things are getting better from the US FDA perspective also. So lots of pharma names have started becoming very attractive. So I think I can go for the largest cap in this stock is a sector is Sun Pharma. So one can look at Sun Pharma, then Lupin, Dr. Reddy might correct today, but then again it gives good comfort. So these are three names I can go for.
Okay, so these are some of the stocks really to watch out for. And in today's trade, what we now say with the market settling, even mid-cap and small-cap space are likely to open higher with a very strong market breadth, it seems, Neeraj, and you have several stocks in 5% plus bracket.
Yeah, we do. Okay, 21 seconds. Maybe we'll take in the top picks once the markets open from both our technical experts, which is Gaurav, Bissa and Mukesh Singh. Ask them for that one idea and then, of course, thank them. But 10 seconds left for the market to close. So let's quickly look at how we'll set to start off. Remember, the SGX Nifty pointed towards pre-open rates pointed towards a flattish start. I would presume we'll start off at those levels. Yes, we are. The Nifty Bank is not participating. So this is in a bit of a contrast to what the SGX was indicating. But let's wait and watch. Maybe there is some more steam left, or maybe we had a bit of a rally ahead of these moves. But one would presume that the global setup is just so positive that it may not be a down day for sure. The Sensex now picking up steam, about 127 odd points. Let's get the heat map up on the screen. Mid caps and small caps starting off well, so the breadth seems to be okay. But let's get the heat map on the screen and see what's happening. Well, fair bit of green, but you would believe even Stevens because a clutch of names are within less than 1% lower and 1% higher as well. Only 2 or 3 names stand out. One of them is Maruti, and of course the commodity pack. So Maruti stands out. And on the losing side, Bharti Airtel, I would presume Idea 2 is under a bit of red, and Dr. Reddy's is down about 2.5 to 3 odd %. But Bharti Airtel, clearly the one big loser. I would presume Idea 2 is correcting in the session today. Let's take a look at some of the other newsmakers in trade before I hand it over to Pradeep. So Avenue Supermarts, I would presume, would be one more stock aside of Maruti, which should stand out. 5% up for Avenue Supermarts. Brokerage is very positive on Q3 numbers. So this stock does very well for itself. What else? Some other result boys, and strong Q3 seen for Kokuyo Camlin, Persistent Systems, Shriram City, and all three are starting off on a positive note. I just want to mark the 2 QIP boys as well and just see what they are doing in the session today. Sanghi as well as Deepak Nitrite. Sanghi starts off about 0.5% higher, and Deepak Nitrite about 0.5% as well. So no big moves there. Let's wait and watch what happens during the course of the day. What are you spotting, Pradeep?
So Nitin, Spinner is higher by around 10% in today's trade. Honda, CL Power among a few more small cap names, and also Butterfly. But Avenue Supermart is up 4.5%. But also I saw V-Mart Retail gaining almost 8%. In early trade at least. Now it has kind of normalized. A lot of volatility there. Bhushan Steel, as we saw, is up, but there are some other mid-cap steel and alloy names that are also doing well. So this is yet another sector. JK Paper is up by around 4.5%. Nitco Tiles is one, which is gaining 4.5% now. And also you have Kokuyo Camlin as expected. Texmaco Infra is yet another stock which is looking strong, in MTech Auto. So focus will be on other stressed assets as well after that aggressive bid on Bhushan. On the negative side, Wakarangi is down by 2.5%. UCO Bank, after rising significantly over the last few sessions, is now down by around 2.5%. What is also not doing well is some pharma names like Divi's Lab is down, and also you have L&T Technologies. Yes, that is finally correcting. And also you have among a few key losers, Godrej Consumer. That would be a significant name down with good enough volumes as well.
Let's take initial thoughts from our experts before we thank them. And if Mukesh is with us, Mukesh, before we thank you, anything that's popping up on your screen right now in the first 3 minutes of trade?
Niraj, I think IRB Infra is showing a bit of an impulsive move. So that seems to be a bit buy around current price of 246, and stop is to be placed below 242. And target on the upside can be, one can expect a push towards 255 for the day.
Okay, Gaurav, what are your thoughts? Anything that pops up on your screen looking interesting for a trade?
Well, yes, one of the name that is Jain Irrigation that is seeing good amount of long positions even in initial hours. So I think if it sustains the current price, it can head towards 152 intraday itself. So one can buy about 147, 147.5, surplus of 145. On the upside, targets of 152, 153 can be seen.
Okay, gentlemen, all of you, thank you so much for taking the time out. Mukesh, Gaurav, as well as Sandeep, Jain, much appreciate you being with us this Monday morning. It's a good start. Now the Nifty's picked up steam, 0.5% higher. So now following what the SGX was indicating as well. No complaints. The Sensex 223 points higher. So well, a strong start to a Feb series after what's been arguably one of the strongest series that we've seen in the recent past. To talk about all of that and more, Nirav, Sheth, Johnson from SBI Caps. Nirav, having you. Thanks so much for joining in.
Thank you.
If people were hoping for some decent upsides to 2018, a lot of them got those targets met in the first series itself. A really strong start to the year.
Absolutely, and I think that you need to go back and see what has happened, right? I think after 15 years, you are seeing the kind of acceleration. We are not talking about growth limping back, we are talking about real acceleration. Eurozone is on 20-year high, Japan is on 15-year high. You're not got a single OECD country which has got a PMI of less than 50, right? And I'm reasonably sure that you're going to see the fallout in terms of what happens to the Indian economy. Look at the PMI figures for December, 56. So in a sense that your growth seems to be melting up, right? And that is exactly what is happening to the risk assets. They are melting up, but they're chasing growth so far. Second important thing, and what is a bit surprising to me, is that the inflation is still about 70-80 basis points lower than what you've seen globally pre-crisis levels. Your growth back to the pre-crisis levels, your inflation still lower, and that is nothing but an extended Goldilocks scenario, right? So I think the party continues.
Okay. But if you look at the kind of valuations that we see today, this global growth in a big way is fueled by cheap money coming from central banks. So do you think it's reasonable to kind of forecast the current growth to next 3-4 years and then justify the record valuations where US stocks are sitting or even Indian stocks are sitting on?
Right, so a good question, which is what I'm saying is that you need to look at growth in conjunction with what my long-term bond yields are. Right, so if you go back 10 years back, then you had bond yields in the region of 4.5–5%. Today you got US bond yield about 2.65%, right? And that is exactly the way we look at it, is that you're looking for a low required rate of return as you move forward. And that means that, your markets will reset at a higher level and then you probably get lower returns going forward. Secondly, and we've done some work on it, right? So your long-term bond yields trade off two important things, right? First of all, what is the real growth rate in the economy, right? Now, as at some point of time, India was growing at 8.5%, you had bond yields which are higher. Today, you've got 6.5% growth, therefore your bond yields are lower. Second is inflation. Inflation doesn't come back in the system, then you'll be forced to chase returns. I don't know what happens 3 or 4 years down the line. What is critical is that once the business momentum starts, it continues for a while. That's the nature of the business, right? So at least you can say with reasonable level of certainty that your earnings upgrade story will continue in 2018. And this is my personal belief that you can always figure out what is very cheap, what is very expensive. In between, there are shades of gray, right? Who is to say what is the right earnings growth? Who is to say what is the right earnings multiple? Because small changes in assumptions will change the way you look at the valuations.
Yeah. Well, and that's a pertinent point. I think I'm forgetting the author who wrote this piece in April last year, saying that we are probably in a scenario wherein the traditional value matrices for PE multiples may not really matter. We might actually be living in a higher PE multiple world now. Also because maybe companies have to invest less money, in the US at least, to get in that higher earnings multiple. And therefore, they are, in that manner of speaking, asset light, maybe for India as well. Yes. I just wanted to ask you one more question before we move to specifics, Nirav.
Sure.
And that is, who is to say that there should be a bull market in both equities as well as bond markets? We could well have an extended period of a bear market in bonds across the world and equity markets still doing reasonably well.
Right. So the way to look at it probably from our perspective is that the initial pickup in bond yields usually reflects higher real growth rate, right? That is not restrictive on the growth, which is why if you've seen bond yields moving from whatever 1.8% to 2.65%, it just reflects higher growth rate. There will be a time when the increase in bond yields will start impacting my growth rate. That is the point you need to get worried. Now, what is that level? When is going to come? These are the questions that we answer. We look at incremental data points to try and figure that out. But like I said, we are in initial stages of this entire pickup in growth and to some extent pickup in bond yields. And therefore, I suspect that, I don't think I'm too worried about the global macro in 2018, so as to say.
You're worried about the Indian macro because I think the conversation 4 months ago was that while the macro had performed so far with crude, etc., all in our favor, now the macro, even if it turns adverse, the micro will work in our favor. Now, while that's accepted that the micro will work in our favor, how big an impact could the macro have if it doesn't work in our favor and if it works against us?
So it is certainly a risk, but you have to put things in perspective, right? So if you're talking about oil at about $80, last time we had oil at $80 in 2008 and 9, and that time GDP was half the size. So you look at this perspective in terms of what is the size of my GDP at this point of time. You've got a better pass through in the system. Secondly, I think again, what is really hurting Indian economy, right? You're worried about the fact that your bond yields have rallied. You're worried about, not rallied, sorry, they've gone up. You're worried about the fact that Brent oil is up. Certainly, it's a cause of worry. But I'm fairly certain that once the GST is in place, and especially we've got EVA tax bill now starting on 1st of Feb, I'm reasonably certain that GST revenues will look far better. I refuse to think of a scenario where under GST, under a more compliant world, you will have lower tax revenues. I just can't buy that. And I think that if you see the monthly numbers picking up, I think that a lot of pessimism around what happens to bond yields will go away. Crude remains a risk, and we have to live with that. You also believe that the shale oil and the rigs will start responding to higher Brent oil prices. So that's a natural mechanism that will hopefully cap the increase in oil prices.
So I think the biggest risk here would be, in case revenues really pick up, they might get used in incentivizing voters rather than incentivizing investors and corporate. Would that be a concern ahead of budget?
Probably. I remember, if I remember right, in the first address that the PM had in Ahmedabad after winning the elections, I think he said something to these lines that 2 years of repair, 2 years of growth, 1 year of election, right? So you into that final year, and therefore I suspect that they'll be far more political savvy when they get into the elections. You've got 2 important elections coming up, which is MP and Rajasthan. But I don't think that they'll change their ideology, which is just giving out free doles. I don't think that is the way the government has worked. You'll probably see. I think what you need is essentially, I think we lack animal spirits at this point of time. Look at what Mr. Trump has done, right? You've just reduced the tax rates to about 22%. The effective tax rate there was about 24.5%. But it has just got animal spirits kicking in. In India, we lack that at this point of time. If I think the government does something which can kickstart real estate, which to us, from a lot of work that we have done, is the biggest pain point in terms of jobs, in terms of the investments in the system. If you kickstart that, I think then we are on to something more.
What they're doing for affordable housing.
That is small part. I'm saying that, let's say, for example, this is not my idea. This is, I was conversing with a CIO, and he says that, for example, if you say that, for all the first-time home buyers, your interest on mortgage loans is tax deductible without any cap, right? Today the cap is about 2 lakhs. Let's say you take a 50 lakh loans, you pay 5 lakh rupees of interest that is tax deductible, right? That gets the animal spirits moving in, and and you can have a sunset clause, right? Something on those lines. Or you say that, I'm willing to take the risk and I'm going to give a glide path that the corporate tax rates in India are going to come down to 20%, right? Even your effective tax rates are close to about 24-25%, and you remove all all the subsidies that you give over that. You need that for people to say that I want to jump back, right? I think that is missing. Either it comes just because the growth comes back, or you try and sort of ignite that. I think that we need a bit of policy push.
Well, let's see. If you just hear the 2 interviews that PM Modi has given, I think he's made categorically clear that development will be the only agenda. No freebies, no SOPs. That's not on the anvil. Yeah. One certainly hopes that happens this time around for sure. A couple of pockets, Nirav, that I wanted to get a quick view on. If there is no tinkering with the LTCG, but the timeline is increased to 3 years, will that be a perceived negative? Will that have any impact on the equity markets?
Well, it could have a minor impact in a sense that it will have a minor impact in a sense that maybe you can have a 3% cut, 4% cut. I can't predict that, but then you'll be waiting to buy. is a point. Now, whether you start buying when the market is around 3% or 4%, that no one knows. But that doesn't change the narrative about being in the equity markets.
But you are saying that there is money waiting to buy it at a fall of 3-4%.
I would suspect that. And I think that is exactly what seems to be happening globally, right? Just think of it. Hang Seng had some, I think, 18 or 19 days of up move. It corrected about by 1.5%. Next day, it was up 2.5%, which was the last Friday. So that tells you, and I'm saying I'm not surprised because I'm saying we'll see. I mean, just look at all the earnings that have come out. How many of them are disappointed?
Yeah.
Right. So market is chasing growth, and I think that is the basic platform on which the so-called bull market is built right now.
So where do you see growth, meaningful growth from these levels over the course of the next 18 months?
So our own earning estimates are about 19% growth for the next year. I suspect we'll see some cuts because of telecom. We've been expecting that. So you've got 6 quarters of about 18 to 20% growth going forward, which is why I would believe that it will take something more than a serious disappointment for markets to, sort of pull back. And you are seeing this growth after some 4 or 5 years. So your 4-year growth rate in earnings was about 6% CAGR. So it's coming back after a long time, and it's likely to be there for the next 6 quarters at least.
What will contribute? I mean, telecom will not. What will?
45% of the earnings growth is being led by banking sector, which is 35% of the market. But the fact of the matter is that despite this earnings growth that you're seeing in banking, they'll be far lower than what they were 4 years back in absolute terms, right? So it's a mean reversion that is happening after a long, long time. Axis, State Bank of India, all these kind of companies are going to come back. And with a reasonably high level of probability, the earnings are going to be back.
And what do you like? What would you like to buy?
We've been very vocal about being in the banks. Within banks, I think that it's time to look at the corporate lenders, right? So you're certainly seeing slippages which have pulled back quite a bit. Your credit costs are normalizing. FY19, I think the credit cost will sort of peak out. And I think that is the India story. So we've always believed that you need to have credit to have growth. Now just think about it that, a large part of India, right, 80-85% of India never had access to decent credit. How could you ever expected them to grow at, at their potential? Think about a dhaba somewhere else. What are the internal accruals? How can the guy expand? How can he put on few more benches? That is what Aadhaar does. That is what a banking account does. He starts borrowing 2 or 3 lakh rupees. He is investing. 93% of my employment is in unorganized sector, right? So these are all long-lasting changes. And we don't know when that J-curves happen, right? But I'm saying the enablers are in place. And I think that if I look at the next 5-10 years, I would argue that banking is the place to be.
The story that you're talking about, maybe close to the bottom of the pyramid, how do you play that? Do you buy SPI and Axis to play that story, or you buy mass financials, AU Small Finance, or Equities and Ujjivans of the world?
Right. AU Financials, Equities, small finance banks. I'm saying even the corporate lenders are coming back, so that's one part of the story, but that is mean reversion. What is really opening up, right, in terms of the credit, what will take credit to, let's say, 120, 140% of the GDP in the next 5 years or 10 years? This is what is going to drive credit. Anyway, the large corporates are being driven to the bond market because they're far more efficient, and the regulatory push is towards pushing them towards the bond market. And for the first time, it makes sense for you to underwrite credit well. There was always a demand from this segment, right? I did not know how to write credit, how to sort of digitize the lending process, how to digitize the collection process. Those things are happening now. And that is what is going to drive credit forward, and that is what is going to drive growth forward.
Okay, I have one last question.
Sure.
And this stems from a conversation that we had the last time, wherein you gave a wonderful explanation of how aviation as a space has a natural moat around itself, and it's a space to look at. Now, I'm sure that business theory still stays. The elephant in the room is the crude prices now.
Sure.
Has the thesis changed therefore?
Right. So if you ask me, had you asked me about a year back and told me that, I'm telling you that crude oil is going to be $70, I would have told you that, then you need not be in aviation, at least from a short-term perspective. But that is what growth does, right? So despite the fact that you've taken the ticket prices up, the growth rate for traffic for December was 19%, right? So it seems that the market is absorbing a lot of things in place. And therefore the earnings are fairly likely to be intact. And this gives me far more confidence that if you look at the next 3 or 4 years, then this is real consumer discretion. And the industry dynamics have changed, right? It doesn't require any capital. It is all sale and leaseback model. And these companies are trading at 8 or 9% free cash flow yields. Now you tell me how many companies you've got where you can make that kind of investment case. What worries you is volatility, not the fact that it is not a viable business model. You have to live with that. I'm saying, like Warren Buffett said, right? I would rather want an 18% volatile growth other than a steady 12% growth. From point to point, you are looking at accretion of the book value.
So, one would wish that one should have bought when these companies were under stress. And so people are now buying companies which are still under stress. In that pocket, if you had to pick up something in steel or in power or infrastructure.
So I think we initiated on JSPL about 4 months back. We had no idea that the stock will rally 80%. But that is what happens because, and as a matter of fact, in our strategy we talked about the fact that deleveraging is going to be a big theme itself, right? So you look at all the companies where you got lower equity as a part of the enterprise value. It requires a lot of work, right? Because it's a binary situation, right? You can lose a lot of the money that you put in. So that space needs to be explored, but you need really in-depth analysis.
Fair call. Maybe that conversation, a separate conversation with Nirav at some point of time later. But Nirav, thanks so much for taking the time out and being with us today on the show and giving us your
pleasure.
thoughts.
Thank you.
All right, the markets look okay, very well poised. Let's take a break on that note. We come back with some more conversations on the other side.
हमारे पड़ोसी मेहताज हॉलिडे के लिए अब्रॉड गए हैं। हम कब जाएंगे?
उसके लिए पैसे कहाँ से आएंगे?
लेकिन मिट्ठू इन्वेस्ट और उस पर इन शुक्ला जी की जिम्मेदारी छोड़ गए हमारे सर।
एफडीज में इन्वेस्ट करूँ क्या?
अरे मिट्ठू जी, आज के जमाने में इन्फ्लेशन के बाद एफडी रिटर्न से हाथ में क्या बचता है? ईटीएफ में इन्वेस्ट कीजिए, जिससे लॉन्ग टर्म में मिलते हैं स्टॉक मार्केट जैसे हायर रिटर्न्स, यानी इन्फ्लेशन का कम असर।
लेकिन स्टॉक मार्केट तो ऊपर नीचे होता ही रहता है।
ईटीएफ लॉन्ग टर्म इन्वेस्टमेंट के लिए बिल्कुल उपयुक्त है। ये देखिए, हायर रिटर्न्स, इन्फ्लेशन बीटर एंड नो टैक्सेस। ईटीएफ में निवेश कीजिए और देखिए हाथ में कितना बचता है। भाभी जी, जरा कोकोनट ऑयल देना।
ETF investments are subject to market risks. Read all scheme-related documents carefully.
9 to 5 job, अरे 5 to 9 job, भाग दौड़ all the time job. The roaming वाला job, the deadline वाला job, or are you living in the market वाला job?
Life is full of options. Choose a job and earn on your own terms. Choose to become an LIC agent. It's more than a job. It's career insurance. Be your own boss. Be an LIC agent. अब life set है.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
What do we want from our country today? From the economy, from the politicians, the policymakers?
Do we want a better deal?
Maybe more perks for smaller businesses or large businesses or any businesses.
Do we want it to be easier to create something new?
To find the job of our dreams, to create jobs for dreamers.
Do we want growth? Not just for the sake of growth, but for what it represents.
Not just numbers on a graph somewhere, but prosperity that we can see, touch, feel.
These things we want.
Can we expect them? Realistically.
It's time. Time for us to accept less and expect more.
Time for us to get on the path to confidence once again.
Time to go from making promises to keeping them.
From manufacturing slogans
To really making in India.
From a promising economy
to a delivering economy.
Can this budget mark a return to confidence?
Watch Budget 2018 with Bloomberg Quint. We're back with Indian Open right here on Bloomberg Quint. 3 days to the union budget, and a big question that's been bothering equity markets: return of the long-term capital gains tax. So the question is posed to two market veterans, Saurabh Mukherjee of Ambit and Hiren Ved of Alchemy Capital, to find out what they made of this threat, and do they really think the finance minister will choose to take a more populist stance in this last budget before the general elections.
If you look at the history of all NDA governments, right, I think they've kind of stayed away from populism in the budget. And I think if we give them some credit that they are smart enough, then they know that all the rating agencies are looking at them, the entire financial market, the bond markets are looking at the budget. My sense is that they will stick to the fiscal prudence, not do anything that will shake the confidence of the markets, to say that there's massive populism, so on and so forth. I think the good thing about the budgets in India is that everybody goes into the hyper mode around the budget, and then post the budget is over, nobody really cares. So I'm just trying to be cynical, but I'm saying that if you want to be populist, you can be populist outside of the budget. You don't need to do it inside the budget, and you can keep a clean cut. But having said that, my sense is that if you read between the lines of what Mr. Jaitley has been saying, and the few sound bites that you get, is that they don't want to stray away too much from fiscal prudence. So I think the math will be okay. Now, whether you believe that math or not, that's entirely up to everybody in the markets to decide.
What is okay? And I'll come to Saurabh as well on that, but what is okay?
I think the big figure that people are looking at is the fiscal deficit number, right? I mean, I think that will be more or less in order. So they will look to go from 3.4, 3.5 this year, I mean, the year that went by, to 3.2. So they will show that they are on the glide path to a reasonable fiscal deficit number. And they'll take credit for maybe a largish sum on disinvestment, because they can prove and say, look, we told you we'll do this much, we've done better than that last year. So now we're taking it even higher. So, I think last year's figure was 75,000 crores. They can be more ambitious and say, can we do a lakh and 10,000 crores of disinvestment this year? That is possible. And then, the GST revenues, they will say that, it could be buoyant in the next financial year, because we are ironing out all the issues this year. So next year, you should have a good revenue number. And you're done.
Yeah, well, let's wait for those numbers as well. Until now, you need to speak to tax experts. There's no clarity on that. So we'll be watching out for those numbers too. But Saurabh, the same question actually before we move on to other topics. Are the equity markets, and you can argue the bond markets have a different perception here, but are the equity markets already discounting some bit of a move away from 3.2 to maybe a 3.5 number for the year, and then FY19 moving back to a 3.2, 3.1? Is that the nature right now?
I think most bond and equity market investors seem to be focused on 3.4, 3.5. The 10-year bond yield running up since August from 6.4, so 6.4% in August to around 7.2%. The 10-year bond yield tells its own story. So I think 3.4, 3.5 is what most market participants are expecting. It's not obvious to me that that's any great disaster. And in the context of Indian budgets, as Hiren was saying, this is actually fairly fiscally conservative. My reckoning is even for year to March 19. the government will broadly stay in this ballpark of a budget deficit around somewhere between 3.2 to 3.4, which again will be par for the course. Where I think there'll be a lot of verbiage, a lot of sort of noise will be about how much the government cares about rural and about the weaker sections of society. My reckoning is there'll probably be announcements about agri sector, MSP, how to enhance the minimum support price construct. Almost inevitably, there'll be the sort of the required announcement on low-cost housing and so on. So there'll be plenty of heat and noise around pro-poor policies. But the overall thrust of the policy, as Hiren is saying, the overall thrust of the budget will be fairly fiscally conservative, given that we're only 13-14 months away from a general election.
Okay, noise around LTCG started, Hiren. This time around, not so much the government's doing, but it's started yet again. If at all, there is some bit of tinkering. Will the markets take it very negatively?
You know, I think the good thing is that the debate starts well before it. So everybody's sensitized to the fact that, you know, if capital gains tax comes, then, you know, it'll be bad for the markets. But I think we have to understand the nature of the market, that the markets will only worry about something that is not expected. I mean, if you have such open debates about capital gains tax well before the budget, my sense is that it's not going to really matter. If
that's
you
the
ask
idea,
me.
Right? Prepare people in advance.
Yeah, I mean, you release a balloon and then, you know, you decide whether you want to float it any further. My own sense is that it doesn't make sense, you know, because if you have a big disinvestment program, you know, why disturb the apple cart, right? Secondly, when you bring in long-term capital gains tax, I presume that is in lieu of STT. There's far better visibility on what revenue you can get on STT than you can ever fathom what you would get from capital gains tax, right? So those numbers are not really great, and for a few thousand crores, you know, why risk the sentiment, so on and so forth. But that's the rational side of me speaking. I don't know if there is a symbolic side to this. Some people may argue that this was brought in when equity markets were not doing that great in 2004-05. We were still in the early stages of a bull market. Now, you know, people have taken to equities, to SIPs, you know, the money is in, people have been rewarded, and then, you know, they should be paying a tax. But again, if you ask me from a probability perspective, I think it's a very low probability event, but you never know.
So Hiren will probably still go out and invest big time, even if there is long-term. Sort of, what about your top clients that you guys speak to on the foreign side? I mean, will a probable LTCG impact sentiment or flows towards India? Not that they've been too great in the last 6 odd months any which ways.
So I don't think that too many other large Asian economies which have long-term capital gains tax for equity investors. So we certainly will mark ourselves as the odd man out in Asian emerging markets. So if you want to sort of, you know, queer the pitch for foreign investors, this certainly would give them jitters about, you know, about an unconventional policy introduction quite abruptly. My own sense is if you mess around with LTCG, you do it immediately after elections. To do it in the 12-month run-up to elections, to do it at a time, as Hiren is saying, where you'll probably target 1 trillion rupees of disinvestment, will certainly be a very counterintuitive move, right? We've seen a few counterintuitive moves from the powers that be in the recent past, but this will be up there. You want 1 trillion of disinvestment, but hey, long-term capital gains tax. So I think I agree with Hiren. I don't think it makes sense in the current context, the current environment. One day, perhaps the time will be right, but it doesn't feel like today is the right time for this.
Also, I think the point that he made, and Pranav Seta from ENY was making, that if LTCG comes in, it comes in with STT moving out, and that's a sizable chunk of revenue that will go out as well. You arguably can't have both in the same frame. So therefore, the net revenue intake is fairly minimal.
Yeah, right.
So that is one point, Hiren. The second point is, while rational or irrational or symbolic or otherwise is a separate point, the impact that such a move has on equity markets, not really in terms of whether the investment cycle gets disrupted from an equity side, but the near-term points impact. I mean, do you think this move, if it comes about, has the potential to derail or maybe, take off 5-10 percentage points?
I mean, as they say, if the markets have to correct, they'll correct, and then you'll find a reason. So this could be that reason. I mean, we've had a one-way market since the demonetization lows. People have been, waiting for the much-wanted correction. That hasn't come. This could be a trigger for a healthy correction in the stock market. So if you're asking me, I don't see a long-term impact, but are you asking can this be a catalyst for a correction? It could well be. I mean, if they do announce. I mean, and some of the froth in the small and the mid caps could get corrected and disciplined as a result of that.
Yes, already showing signs of that maybe the last couple of days. I mean, just trying to figure out what are the big numbers that the market is working with. I thought LTCG was one probably, if at all it comes about, or GST revenues were other. What about disinvestment? Both of you brought up that point. I think the last statement that came out 2 days ago from one of the government officials was that we'll comfortably meet the 72,000 number, and which were maybe until the end of December was in doubts. I think maybe they are taking into account the HPCL ONGC deal as well. But is the state set for an ambitious target for FY19 as well? You think 1 lakh odd crores is in the annual?
I think they have no choice. I think they will have to have a punchy number, because if you look at GST revenues, there's still a degree of opacity. There's still a degree of uncertainty on exactly which direction GST revenues are going in. On direct tax revenue collections, you've had a good run, but you can't expect direct tax collections to give you, even another 18, 19, 20% next year. So even if you bank on healthy direct tax collections, because of your lack of visibility on GST, I think you'll have to pin your hat on a big number on disinvestment. And given the state of the stock market, why not? I mean, if you've pulled off 72,000 crores, I don't see why they shouldn't bank on 1 trillion rupees of disinvestment in the year to March 19. It seems like the right thing to do given the level of bullishness in the stock market, and also it's the right direction in the country to go, and increasingly the public sector companies get owned by the broader stock market rather than by the sovereign.
Okay, Eden, any thoughts here?
No, I think I agree with him. I think they will gun for a higher number, and they don't have a choice, frankly. I mean, because there is no other, tinkering that they can do. They've had to bring down GST rates on several items, so there is some bit of loss there, and they kind of took the leg off the pedal by delaying the e-way bill. But as you see in India, I mean, you don't discipline people. They will just do what they have to do. So I think given the uncertainty around the indirect taxes and the limited headroom on direct taxes, the only way is to do aggressive disinvestment.
Well, and that's the conversation with two market veterans. You can, of course, get this entire conversation on our website, www.bloombergquint.com. Remember, starting today, until the budget, we drop into a dealing room every afternoon at 2:45 p.m. to find out what the traders have to say about Budget 2018. We start off with Edelweiss Securities in the session today. Okay, on to corporates, and it's been a strong quarter, December quarter for Persistent Systems, with the mid-cap IT players' margins expanding to 12.5%, 12.4% to be precise. But what have been the key contributors to the healthy quarter? Let's ask the management. Joining us on the show is founder, chairman, and managing director Anand Deshpande, also Agam Vakil, who tracks the counter closely. Johnson. Agam.
Well, thanks, Niraj, and Mr. Deshpande, thank you for joining us. Let me start off with the fact that your digital segment has done so well. In fact, we've seen about a sequential 9% growth, and this now contributes to well over 21% of your overall revenues. So I want to start off by understanding what's really driven growth in this particular segment for this quarter.
Okay, so overall our revenue was about 122.5 million. In rupees, it was 7,918.9 million. And definitely the digital grew by about 8.6%. And most of that had to do with various growth across different lines, both Appian and also in the Salesforce context. So both of those grew well this quarter. And in general, this is a good steady quarter that we are expecting. We are on a journey to transform the business from being all effort-based to taking more responsibility with customers, both on digital and IP. And some of the evidence of what we see this quarter is relating to that.
So on a related note, your enterprise business also continues to show strength, now contributing well over a third of your revenues. I'd like to understand that how do you expect the next couple of quarters to develop, especially when it comes to the role with your partnership with the likes of IBM as well as Salesforce going ahead?
Yes, see, overall, what we have been observing and what we are focused on is that every enterprise is starting to become a software-driven business as they look at their next generation transformation. And we believe that our experience on building products and our ability to deliver solutions helps us be the partner for companies trying to become software-driven businesses. Our partnerships with partners such as IBM and also with people like Salesforce and Appian and others helps us get into these kinds of accounts. But really, once we are in, we are trying to convince customers on how to become a software-driven business.
Again, so much has been spoken about your IP business, which now is well over a fourth of your revenues. So I wanted to understand what are these IPs which are driving business and which are likely to take and see more traction with respect to your consolidated revenues as we move into the next couple of quarters.
Right. So see, we have traditionally had some of our IP come in from acquisitions of IP from customers who are looking at non-strategic products with them. And that has been the Accelerate business. But over the last couple of years, we have been also working with customers where they are handing off their strategic assets with a long-term partnership where we are doing revenue share agreements on products that are actually the future of the company. And some of our products that we are working with IBM Alliance are along those lines. In addition to these two threads of revenue where we are seeing growth, we have also invested in new technologies around Share Insights, which is our data and analytics platform, and also Sentient, which is our platform for endpoint client management and security management. So we have a set of IPs that we have built out. We also have a product called Neuro, which is our security risk-based compliance and risk-based security product. So we have some of our own homegrown products now that are also starting to contribute to revenues in this quarter.
So there are, however, some concerns with respect to your ISV, or for that matter, your core intellectual properties, on account of volatility and perhaps some lumpiness, every now and then. How are you assessing these trends, and what can we expect?
So I think overall volatility in the market is very high for the market that we play in. And since many of our newer deals are coming in through IP-led revenues, the IP has a lumpy effect in the sense when you close the deal, you get a reasonable chunk of money. But if things get delayed, which can happen, then these things move on to the next quarter, or if you lose it, then you lost that revenue. So there is a little bit of lumpiness that is inherently going to be there in our business. The best way to counter the lumpiness is to have a broad enough pipeline that ensures that at least few of the deals on the get closed at the right time on an ongoing basis.
So finally, a word on your Accelerate business, which has been slow in relation to your other segments. In that case, can you tell us about what's going on here? What are the challenges here, the possible problems, and the outlook with respect to your products and solutions business?
Right. So I think the uptake on some of our own IPs that is going to contribute to the growth of Accelerate has been slow this quarter. But there were a few deals that should have closed, which didn't close this quarter, but hopefully will close in the next one. So I think overall, the IP that we have built, which is our own around Share Insights and Sentient and then Neuro, are starting to look quite fine. And I think this should help us in creating growth rates for Accelerate in the future.
All right, so we leave it at that. Thanks for joining us and giving us an outlook as well as running us through the updates in this particular quarter. So overall, it's been a very strong quarter for Persistent Systems. There's no doubt about it. And we have seen a large part of that growth come in because of the digital segment. And of course, intellectual property-led business has continued to show strength for Persistent. Overall, a good set of numbers, and we'll be watching out for more updates on the same. But with that, it's back to you in the studio, Neeraj.
Thanks, Agam. not unfortunately showing in the stock. It's up down about 1.25% on a day, when the markets by and large are doing much better for themselves, I must say. Maruti is the big gainer, and don't forget that large cap IT is not doing poorly. TCS is up almost 3%, and that's a big move. It's 3217. So all of the IT stocks, large cap IT, comfortably trading above the buyback price that they had given. I'll give a reason or two as to why you should have looked at them more actively. And look at Emphasis, that is at 905. That's up a whole 10%. It's a big move that we're seeing in Emphasis BFL. A couple of others like L&T, Infotech, etc. too, doing rather okay for themselves. So good going really for equity markets by and large, more so for IT. That certainly seems to be in the thick of things. So I'm sure the FNO show will take forward all of that action. For now, from all of us who put Indian Open together, thanks so much for watching. Stay tuned to Bloomberg Gold.